Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Yesterday was a pretty significant day, not just for the cryptocurrency market, but for markets across the board, for monetary policy, for the economy, you name it. Yesterday's data really was an important one, and that's what we're going to talk about in this video. And I'm going to be honest with you guys, I still do not believe that the bottom is in for crypto. So many people, and they're the same people that show up on these videos every single time there's a rally to try and tell me that I'm wrong on my bias. And at the end of the day, guys, I could be wrong. I just happen to believe that these markets are going to go lower. Yes, crypto saw a very good day off of the back end of the Fed fund rate. You know, they gave a 75% basis point rate hike, which puts us around about that 2.5% Fed fund sort of neutral rate. And you can see the last time we got here was, of course, 2019, which led to a yield curve inversion. And also they had to very quickly undo it to support markets again, because the repo market, which is essentially how your big banks or your main banks in America lend money to each other, clogged up. And the reason I think these markets go lower is I think that right now everybody's watching inflation. And it's my opinion, look, markets rallied really because people are going, okay, not only did you have short squeezes, you've got people FOMOing back in, you also have people trying to price conditions into markets. So we know that we're probably not going to get a 75 basis point next month. They said it's not off the table, but they said it's going to depend on the CPI print. And I believe that CPI isn't going to be 9.1 again, it's going to be lower. So I think we're now going to enter a very full sense of security moving forwards, even though there are imminent threats to the financial stability of the globe, not just the US now, everywhere. And this is what I'm waiting for. You know, structurally also, I want to really just talk to you guys about structurally, this downtrend is very much still in play. There's been no divergences and nothing to make us think that this is a bottoming structure. We will talk about that. We'll drop to the weekly and we're going to look at your bullish indicators, and of course, or sorry, not bullish indicators, but your indicators that really support this downtrend that we're in. You know, I am not convinced. Could this be the bottom? It could. I just don't believe it is. And I think we are going to get lower prices across the board for the cryptocurrency market. And I think that has a lot to do with everything going on. But the fact that markets rallied with a 75 basis point increase, which is, by the way, the last time they did that was in the 1990s, you know, it doesn't fill me with a lot of confidence moving forwards, because basically markets would have gone, okay, if we get a 1% rate hike, so 100 basis points, we're going to sell off. If we get the 75, which everyone's expecting, we're going to rally on the back end of that because we know we're not going to get harsher conditions. The issue is 75 is still bad. Inflation is still very high, even if it comes down slightly. And the problem is you have things starting to break all over the damn place. And I feel like we're just waiting for that Lehman's moment, where essentially they look for somebody to blame for the next leg lower. And I do indeed believe that the NASDAQ and the S&P is very much going to enter a 2008 recession period and a 2000 recession period. And crypto, of course, which follows these asset classes very closely, is going to follow along and put in lower lows. That's just my opinion. Could I be wrong? Absolutely. And everybody can come on here and say that we were wrong. The people that show up every time we get a dip, or every time we get a rally, were the same people that are showing up here and the same people that were showing up here, now showing up again today. You know, we've essentially been saying we're expecting lower prices from around about 44K. It went to 17. Yeah? We've got many things right, but that was one thing that we got right. We've got many things wrong, but that was one thing that we got right. Just be patient. One swallow does not a summer make, guys. You need to be objective here and take your emotions out of it. And of course, rallies are going to get a bid. What do you think a relief rally is? What do you think drives it? What are the emotions that you're feeling towards this market right now? Are you looking at it and going, oh, maybe I missed the bottom, I'll put some money in? Okay. Well, the problem with that is when it starts to roll over again, people will do the opposite. And I feel like, you know, everybody's trying to call a bottom here. They're kind of going, okay, well, it's unlikely that we're going to get another 75 basis point interest rate hike. And it's unlikely that inflation is going to persist at 9.1% or be higher. So let's get back in and kind of, you know, look for that relief. The issue for me is, what is it that we're not looking at? And what is it to break? You've got to remember, people have completely forgotten about the yield curve. Go take a look at the yield curve. This has predicted every single kind of catastrophe in markets since it's happened, the tens and twos. Look at where we are. We're in a 2008 period. This is what I truly believe. And markets jumped after the Fed. A rate hike is a trap. Morgan Stanley's Mike Wilson warns investors. Happen to agree with him. Markets are all driven by liquidity. The issue that you've got now is liquidity is coming out of markets. What sustains this rally? It doesn't get sustained, in my opinion. And this is why I'm just trying to be honest here. And you guys make your own decisions and do your own things. Yeah? But I'm saying I'm going to still stay overweight stable coins. I'm going to look for better entries into this market because I want to accumulate crypto. You know, I don't want to hold cash. I don't want to hold stables. I want to be in crypto. And we are all in crypto. We trade crypto. We do everything crypto. But for now, I don't want to get caught on the wrong side of this. For me, when I weigh up the reward to getting in here to the risk of potentially this not being the bottom and things really capitulating in the manner that I think they may, it doesn't fill me with a great deal of confidence. That's just what I see, and that's what I'm going to tell you guys. You're going to get honesty from me on this channel, even if it is unpopular. Again, I said yesterday, this is not how I make my living making YouTube videos. Many other people out there are not in that boat. They have to appease because they essentially need to make money off of the trade that they're in. This is not how I make my money. I make my money from markets, and it's been that way for nearly 4 years now. Facebook just reported its first ever revenue decline ever. That gives you a good indication of the kind of times that we're in. This was shared from Len Alden, I believe, and this is talking about the Fed balance sheet and essentially how you're looking like it's going to come down. You've got the IMF warning rising debt in the Asian puts region at risk. And we tweeted this earlier, tagging David Bell, who actually called this. We've had him on the show talking about China's property market and how it's very vulnerable. And there's lots of, not such amazing things happening. And right now you've got property sales are set to plunge to 30%, which is, or less than minus 30%, which is worse than 2008. For me, this is a 2008 territory that we're in, and we're going to have to get through it. And we're going to be better investors for it. I think bottom callers will be wrong again, as they've been consistently from 69k. Bearing in mind, guys, I'm not blowing my own trumpet here because we were still bullish here. Oh boy, were we wrong. And if I'd only looked at some of these indicators that I'm now going to show you to prove that this trend is very much still intact, and these are just indicators, right? But they're all saying the same things. We've got no bullish divergences happening as of yet on the weekly. Yes, you can find some that may, like the pi cycle indicator, but as some of the broad ones, you guys will know, and I'm sure I don't see any other people on YouTube talking about the demand indicator. It very much supports this downtrend. Just get rid of this. You can see lower prices, lower on the demand index, and the demand index is comprised via price and volume. Your accumulate and distribute index, very much down. There's no bullish divergences taking place here. This is your money flow index, which is showing you the money flow into markets. You need to see this uptick. You have the opposite taking place. So this was your bull run, by the way, guys, with the money flow index. You have the opposite occurring today. And you're getting bullish. Why? Because the price has moved up on pretty low volume. Doesn't make a lot of sense to me. This is the RSI, which of course you will all know. It supports the trend. Not only that, very quickly, I'll pull up, we'll just use Binance's open interest. Supportive of the trend. You've got rising open interest. The pullbacks on the open interest, by the way, occur when the price is going up. That's an inverse correlation right there. This is showing you that the interest in the market is a seller's market. It's a bear market, guys. And it will end, but there's things that have to happen for us to have the confidence to get back into markets, not just guesswork. Ultimately, what is trading and what is investing? Well, you're taking your chances on something going in your favor. I'm going to wait until I see more evidence of something going in my favor than not before taking that trade or investment. And that's what we're trying to do on this channel. That's what we're trying to teach people. And that's the mantra that we're going to be continuing to sort of maintain moving forwards. So I don't think this is the bottom for Bitcoin. Dropping down the time frames. We'll go with the hourly. You can see where you bounced. So what we'll do actually is I'll just delete all of these draws. You can see you do have your trend line here. And you can see where you actually bounced on this trend line. Yeah, you've interacted and bounced on it the whole way up. Just like you've got a capping trend line, you have stuck your head above what this could be considered a bear flag, but this is still a channel to me that you could see the downside of. Do we get up here? Potentially. But then what happens up here? You know, do we hold it or do we come down? And this is going to be the deciding factor. For me, I think you're going to take 17k and put in those lower prices down here. May not happen. If it doesn't, we'll say we're wrong and we'll switch our bias and look for those entries into what potentially could be a new bull market. But that's not the probable case here. At the end of the day, I don't know what way markets are going to go with certainty. But what I can do is stack probabilities on my side to say, okay, I think they're going to go this way. And if they do, we make money. If they don't, we lose money. And right now we are still trading. We'll trade both long and short. But from an investment thesis, we're looking for this market to come lower, to get back in. Again, might not happen. We might have to get in at higher prices than we currently are and may not have perfectly timed the bottom if this is it, which I doubt it is. But we're going to sort of play the market accordingly. That is all I've got for you in this one, guys. Just thought I'd better give this update. Lots of people saying we're wrong. I mean, how are you going to say that based on this move here? You know, when we've been saying basically from 44k, we think the market's going lower. All on my Twitter. All the videos are still on my YouTube. Go and check it if you don't believe me. So it's just, I guess, frustrating. But hey, you guys take your bets. I'll take mine. And we'll see how it pans out. At the end of the day, you know, time is going to be the greatest teacher here. All I've got for you in this video, guys. If you enjoyed the content, like us, always appreciate it. So as a comment. And I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching. See you in the next one.